dig a little bit deeper into the presentation. Just to start, what is factoring? In its simplest terms, what factoring is a sale of a company's accounts receivable in order to obtain working capital. There's lots of types of factoring out there. What Versant provides is called non-recourse full notification factoring. What that means is the account debtors, which is another term for the customers of our clients, they are notified to pay Versant directly rather than paying their supplier, and we take on the credit risk. We take on the risk of non-payment from that customer. So your client is getting a form of credit insurance by factoring their receivables. My background is SBA lending, so I'm very familiar with the terminology of lending. The last bunch of years I've been doing factoring, and I find this is a good translation because I know many people on this call might be more familiar with loans than with factoring. So sort of the comparable term to loan in the factoring world is a factoring facility. We don't talk about loan amounts because we're not making loans, we're buying assets, particularly the receivable. We talk about factoring volume. There's no lender. We have a factor or the purchaser of receivables. That's Versant funding in this case. Instead of a borrower, we have a client or the seller of receivables, which is usually your client that's coming to us for funding. There's instead of a note or loan agreement, we have a purchase and sale agreement, making it very clear that what we're doing is we're buying assets from our clients, we're buying accounts receivable from them. There's no interest rate, and that's a telltale sign that somebody talking about factoring maybe doesn't have a good handle on how it works. They start asking about interest rate. There's no interest rate because there's no loan. There's a I'm sorry, I might have just lost audio there for a moment. But again, you've seen this chart, and I think you've got a good feel for how the two different terminologies compare. Our client profile, we are looking to fund small to medium-sized companies with revenue anywhere from $1 million to $100 million. We've got a few that are a little smaller. We've got several that are quite a bit larger than that, but that's our target. Our average client probably has about 5 to 10 million in annual revenue. And what they all have in common is that these businesses crave liquidity. They need cash. They just can't wait the 30, 60, 90 days to get paid by their customers. And what we do is we provide them that quick cash. The day they issue an invoice, the day they complete a sale, we're providing them valuable cash against those receivables. If a client is coming to us for factoring, chances are they've been aced out of the traditional funding markets, and that can be for any number of reasons. It could be that it's a brand new company, doesn't have a track record yet, doesn't have a history that banks like to see before they lend to a company. Maybe they're just growing rapidly. That steep growth curve can spook a lot of banks. They're just not interested in working with a company that's growing too fast. Or maybe revenues are erratic. It's a seasonal business and revenues and profits go up and down. A lot of our clients, the reason they're not bankable is because they're in some form of distress. Revenues might be trending down. They might be experiencing losses. Maybe they're in the process of going